And so, AJ, I'm hearing that from Mike Santoli, and I'm also thinking about, well, we're a couple months away from an election, and there's all kinds of risk tied up with that. What should investors do looking ahead to some of those things?
I think the IT sector right now, was obviously had a lot of large gains over the last few months, and I'd say IT's here to stay. I'm a little concerned about airlines as well as restaurants and some of the hotels. I think as we move into the next few months with the election, there's a lot of volatility ahead of us, even with the IT sector as well. And there's some uncertainty with foreign policy as well as taxes. So I think it's a good thing possibly just to hold tight a little bit and then find a new entry point as we get closer to the election, try to figure out what will happen on November 3rd.
Yeah, AJ, what is the risk around the election specifically for investors? Is it not having an immediate result? Is it a Biden and Democrat sweep? How do you think about that? What are you telling your clients?
Well, I think it has to do a lot with foreign policy, right? We just got news back from Jackson Hole about the Fed and the average inflation target, right? And so equities is the asset class to be in right now, but I think a lot of it has to do with some of the risk is not necessarily knowing what sectors are going to be affected by, depending on which candidate is in office, right? And so, I'm not a political commentator, but what I can say is that, we're going to have to let the market dictate exactly what its sentiment is as we get closer to Election Day. And so right now, I think you're just going to see a lot of volatility. And that's typically what happens when we come into an election year is you see volatility leading up into Election Day. So I think the best thing to do is sit tight, stay to your strategic levels, and then wait to see how things pan out as we get closer to Election Day.